Hello traders, it is 10:13 EST on fabulous, incredible, amazing November 30th, which is with a very big heartbreak. I am here to report bootcamp is out, favorite time of the year is out, and I'm back to reality. So, this is the second morning trading room is open. Yesterday morning, I warned you, shorts are not an option. Yesterday morning, you witnessed the importance of respecting Fibonacci reversal zone. This is reversal level, retail level. This morning, market opened up at the end of the minor trend, overextended bullish rally. Bullish trend is minor and bearish trend is minor. This is the most crucial retail resistance. This is the most crucial retail support. Market complete indecision. Been open 45 minutes. This is retail levels in front of you. This level is out. Price will skyrocket to the next level. This is institutional Fibonacci levels. This is where a knowledgeable trader monitors for long. This is where we've taken advantage of the market from key Fibonacci support until key Fibonacci targets. This morning we knew extremely well that longs are not an option. If you're buying anywhere near this level, your success rate less than 20%. Here is the short. Will finally 2206 be out? Will price crash and burn through this end of minor trend? What do we need to see? We need to see bearish news. We need to see market in free fall. Why oh why? Simple. That's when market will become interesting, because as a day trader you're interested to acquire position as low as possible, not as high as possible. All hinges on 2206. Will price finally crash and burn through this level? As a knowledgeable trader, you're absolutely prepared. You absolutely understand that being in a trade during OPEC meeting, pretty dangerous thing. With absolutely non-stop data from OPEC coming out about other countries from Iraq and Saudi Arabia, as well as Russia, this will move the markets, in addition to oil news. So please take a look on this chart and please remember, every single level, it doesn't matter if it's baby chart on S&P, it doesn't matter if it's oil level. All the levels been present in front of you for years. How to trade them, you must know the rules. This is institutional resistance. This is where market collapse. This chart been present in front of you for the last 2 years. Have you been acquiring position near this level, or have you been shorting market from this level? Why in the world my bias is short this morning? Key moment on S&P traders. Crash and burn, baby. You can do it. I will never sell you software. I could have done so for many years. Because you cannot trade without knowing the rules. Accuracy of the method in high 90%. Traders from complete beginner to hedge fund trader trading alpha wave trader method that I started developing in 1990s. First strategy was developed in 2008. I'm losing count of how many years I spent studying Fibonacci, which I'm absolutely fascinated and obsessed with, as I can prove to you in my sleep. Market is flawless Fibonacci puzzle. Fibonacci is the only predictive tool in this market. Everything else, background noise. Drastically different structure. That happening yesterday morning when our bias on S&P was bullish. Exact same place where our bias on oil was bullish. Were emails from graduates of the course who sharing they've been buying oil at 30, exiting here. This is the war zone, 49. Exact same level you're witnessing on your baby chart, 2206. You can do it, baby. Breakthrough. Yesterday morning bias was firmly bullish. This morning bias is firmly bearish. And that makes a world of difference. You know where Fibonacci levels are? You know where to look for long, you know where to look for short. This is the reason I live and breathe what I do. Taishi shared in the bootcamp his success story. You know extremely well, we are entering oil news traders. Right now you are in defensive mode. Remember how crucial 2206 is? This level not to be ignored. If not oil news as a timing, market would go into free fall, but oil news can cause us pain and torture. Exact same Fibonacci support as Fibonacci resistance on oil weekly. As Fibonacci support we've taken advantage of yesterday morning on S&P daily. As crucial Fibonacci resistance on retail hourly chart. As unlike yesterday when our bias was firmly bullish, our bias this morning was firmly bearish. Will S&P crash and burn? As we expected, as we waited for very, very patiently. Knowledgeable trader knows what he's paying attention to, as trailing extremely crucial. Being in a trade during major news, not to be ignored. Happy November 30th, everyone. Bullish news from OPEC did not mean a thing. Iraq cutting a production did not mean a thing. Ouch, ouch, ouch. Saudi Arabia production did not mean a thing. All this bullish news and my bias remains bearish. Have I lost my mind? Just like Apple, when Apple was at 130, stunning earnings, and my bias remained bearish, and Apple collapsed 40%. So this is your crucial target. This is where your ratios will allow you to respect this level as your first target. As a knowledgeable trader, you recognize ratios do matter. You could not touch the profits at 2206. You knew extremely well. Market had to move lower, as ratios remain the key. You witnessed very, very torturous trade, and you witnessed how essential it is to remember Fibonacci timing. As I warned you, Fibonacci timing was off. As I warned you, expect nasty bullish pullbacks. Did you stay out through pain and torture? Did you know firmly remain bearish? Pain and torture when Fibonacci timing is off. Expect it. This is key Fibonacci target. Ladies and gentlemen, this is exact same level as on S&P monthly, where price reversed from in 2014, 2015, 2016. These levels had been in front of you for the last 6 years. Same formula. Is it possible? Market is flawless Fibonacci puzzle. Everything else, background noise. Everything else delayed. Everything else is pure nonsense and afterthought. Ladies and gentlemen, this is Oil Daily. You know extremely well why in the world you would never acquire position on oil anywhere near Fibonacci reversal zone. Exactly same identical formula as you witnessed on S&P. What is the problem with oil this morning? Oil at the end of the minor trend. Remember where S&P was? This level is out, oil will go through the roof until here and here. But acquiring long anywhere near this level, not an option. Knowledgeable trader waiting for retracement. Knowledgeable trader monitoring for rules. This is a brick wall. Bullish trend on daily minor. But this is weekly resistance. This level not to be ignored. And this is a chart on oil monthly that's been present in front of you for the last 5 years. This is monthly resistance. This is a pickle. This is a problem. Will price blast through and fly until 60? Price been struggling at this level months 1, 2, 3, 4, 5, 6, 7. Have you been in pain? Or do you know what separates correction from reversal? Rules will forever remain the key. So, bias at this level will forever remain bearish. This is the end of the minor trend. In order for oil to go through the roof, this level must be out. Good thing for retail trader, powerful selling pressure, and to monitor for long as low as possible. Entry long near this level, not an option. Moving my chart to 1 minute. As you can witness instantly, very powerful spiky moves as S&P remains stuck at key target. So, we knew extremely well that this is first target as you learn in the course. We knew extremely well that bias here remains firmly bullish, firmly bearish. So, will buyers step in with vengeance or will price collapse to here? This will be a very interesting place. But if you know the rules, you would love to see price here. This would be drastically more interesting place, which is where we were yesterday morning, where we've taken advantage of bullish rally. So, and this is how knowledgeable trader trades. Stop outside of break-even, oil news in 2 minutes. Agree? Ladies and gentlemen, what would the news be? Expectations of oil 0 ME. Anything above is bearish news. Anything below is bullish. S&P sitting at Fibonacci target that I projected to you a very long time ago. Expect a very powerful move. Stop outside of break-even. That's the key. Oil will move these markets. Here's oil 1 minute chart. And remember, we're dealing with monthly and weekly resistance. Oil news traders extremely bullish. Anything negative, anything below means undersupply, means oil will go up in value. Knowledgeable trader ignores the first few minutes. Anything that comes out of oil, as spikes will be contradictory and can be hundreds of points back and forth. Remember the end of the minor trend, entering long not an option. It's a brick wall. Remember what you saw on oil weekly? If you're acquiring long, you need to be as low as possible. Fibonacci targets on S&P reached. Caution. 4 points later, S&P reached Fibonacci target. Do you know anything that will give you this much precision and this much accuracy? Which doesn't matter if it's Apple Monthly, doesn't matter if it's S&P Baby Chart, doesn't matter if it's ETFs, stocks or options. How in the world did I know that price would reverse from this level after reaching 4 points in target? As we discussed with students, multiple bullish trades forming on multiple charts. Simple, Fibonacci said so. If you understand and respect the price, if you understand where Fibonacci target is, you know exactly where to enter, you know exactly where to exit. That pure and that simple. No matter what you trade. All you have to do, play by the rules every time. All you have to do is remember, only Fibonacci will give you this much accuracy and precision. Only Fibonacci will keep you out of trouble, will show you where to monitor for bullish trades, which we've done yesterday, where to monitor for bearish trades, which we've done today. Second day trading room been open. Friday will be devoted to these levels that you learn how to identify and set up on long-term charts, no matter what you trade. In group sessions, focus on S&P. In private mentoring, we concentrate on instrument of your choice. So knowledgeable trader is out with 2 trades, as you saw. Tashi is out with short, Tashi is out with long. This is the power of knowledge. This is the power of execution. What a pickle! Stunning bullish news. 5 hours in a row, oil is stuck. No matter what frame I would change or change it to, this is a brick wall. This is a knowledgeable trader showing you never enter long near Fibonacci resistance ever. So here's the long, here's the S&P at decision point 2, key Fibonacci target. Every single person here trades different account size. Every single person here has different circumstance. What's appropriate for you, only you know. Can you trade one lot or do you trade 10, 15, 20 lots? This is key Fibonacci target. Stop must be outside of break-even. You saw what happened on the previous trade when decision point 2 was reached. You saw short from as high as possible and long only when opportunity and rules had been met. But decision point 2 never to be ignored. Each and every time. Only Fibonacci will give you this much accuracy. This is a baby chart on S&P. This is exact same level as S&P daily. Totally different strategy. Exact same Fibonacci level. This long-term chart's the focus of Friday class. Short-term charts, focus of Monday class. And that remains constant, no matter what you trade. Here's oil, heading next to 50. Exact same level as you see on S&P. Different strategy. And that's the core of the course. What you trade is your choice.